Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 21st, 2022, and I've decided to go live. I typically do publish a, sub 20-minute market update on Bitcoin and the rest of the cryptocurrency markets on every day except Tuesday, where I also published a live stream. But this past Tuesday I wasn't in. I was at Disney World with my son, and I feel like there's a lot I want to talk about today. And it happens to be Sunday. Most people are at home or are more relaxed, so I feel like this may be a good forum to discuss some ideas, some things I want to sort of air out about the markets. Okay. I hope you're doing well. I hope you're having a great Sunday and you've had a great weekend. The title of today's live stream is that most people are underestimating this pattern, okay? And the pattern I'm referring to is what you see on your screen, what has been circled. Most people are underestimating this pattern, and it makes sense, right? Why wouldn't they? Because we've been in a downtrend, right? And for most people, the trend continues until they receive some strong indication that counters that belief. The trend will continue, okay? And that's just a regular normal thinking. If you know nothing more about technical analysis, you just see trend, consolidation, trend, consolidation, trend, consolidation, trend, consolidation. You expect the trend to continue, okay? But if you look at charts long enough, you can't see it so simplistically, right? You have a more refined eye on the market. And of course, we're looking at the crypto total market cap. So this is everything: Bitcoin, Ethereum, everything else in cryptocurrencies market cap in aggregate, okay? And there's a reason I want to look at the total crypto market cap, because I just want to make a point. All right, now let's first see that I'm streaming properly and that and see who's joined, if anyone. I know this isn't the regular time, so it's a surprising sort of live stream. Let's see. It's a surprise. Okay, we're streaming properly. Please like up the stream. Shout yourself out if you're here. All right, so I want to start with this. Okay, and if you're subscribed to the channel, you'll know what I do. You'll know why I do it. There are a lot of people that don't believe in even the possibility or the feasibility of technical analysis in principle. What do I mean by that? I mean, there are a lot of people that think it is impossible to have any sort of model that can be predictive and completely driven on its own accord. So it doesn't have a cause unto itself, right? It's kind of like the idea of technical analysis and any technical analysis system being fundamental and just based on human behavior, right? The fundamental human behavior. A lot of people don't think that even exists, okay? And that's a good thing for people using technical analysis properly, because they maintain their edge. Because if everybody starts using it, I'm guessing, I don't know what happens, to be honest, at that point. But I just want to sort of quote this one passage from Elliott Wave Principle, Key to Market Behavior, which is the seminal text on Elliott Wave Theory by Bob Prechter and AJ Frost. This is the 13th edition. This is not some fly-by-night operation. This is a manual they worked on for over a decade, and that many people use and have used over the years. Unfortunately, not very many people are serious about their study and application of Elliott wave theory. There's a lot of sloppy quote-unquote analysis out there, people counting corrective waves as impulsive waves, people violating fundamental principles, whatever. But if you're interested in Elliott wave, instead of trying to find a guru, trying to find somebody who you think knows what they're talking about, that's fine and well, but the most important thing is that you do your own research and you figure it out on your own. In that way, you will have the discernment to be able to know who knows what they're talking about. So if you want sometimes a second opinion, if you will, you'll know if it's worth even listening or reading or watching somebody else's analysis. Like, for instance, let me just give you a quick example. Hey, Rich, what's up? Osman, what's up? I was reading FX The Street, or something like that. It just popped up on my Google feed. And this person who is a managing contributor to that blog or something, it's a very popular blog, FX Street or something like that. I'm not even going to mention the author because I don't want to deride anyone, but they were talking about Litecoin and saying that it could go to $10. Okay, anything's possible. We all know that. We deal in probabilities. But the Elliott wave count that they showed was all kinds of wrong, in the sense that it was a violation of every kind of principle you can imagine. Okay, there is such a thing as competing counts. You know, you say tomato, I say tomato. You can read this way or that way, because we all know there are different ways these waves can play out. They don't always play the same. You know, sometimes a flat correction can retrace to 786. Sometimes it can retrace to 1618. Right? Sometimes you get a zigzag retracing to the 0.5 or 618, or even short of the 0.5 Fibonacci retracement level. You get all kinds of things, right? But this was a mess, okay? And I was like, from one analyst to another, I just wrote him I was on my way to Orlando, and I think I just touched down in Orlando, and I wrote him a quick message, and I say, hey, look, I saw your analysis on Litecoin, and here are the huge glaring issues you may want to review on your Elliott wave count. You know, best of luck. That's all I said, okay? But all I'm saying by that is, do your own research. Understand that everyone and their mother has a read and can bust out that, you know, wave counter. And it's sometimes just, it'll do more harm than good. Anyway, let's state this. Okay, so this is Proctor and Frost. They say this. Ralph Nelson Elliott's genius consisted of a wonderfully disciplined mental process. Oh, no, that's not where I want to start. Oh, here. Basic tenets. The wave principle is governed by man's social nature, and since he has such a nature, its expression generates forms. As the forms are repetitive, they have predictive value. Sometimes the market appears to reflect outside conditions and events, but at other times it is entirely detached from what most people assume are causal conditions, okay? The reason is that the market has a law of its own. And that law, which is implied, is basically our, you know, humans, our behavior, our inherent predilection, or sort of the drivers of greed and fear and greed, okay? The push and pull of fear and greed, all right? That's the law of every market. The reason is that the market has a law of its own. It's not propelled by the external causality to which one becomes accustomed in the everyday experiences of life. The path of prices is not a product of news, nor is it the product or the market, nor is the market the cyclically rhythmic machine that some declare it to be. Its movement reflects a repetition of forms that is independent both of presumed causal events and of periodicity. So many times people say, you'll hear this, accounts on, you know, Twitter or wherever, your social media, they have millions of followers. They say, Bitcoin tends to have a bad September. So buckle up for a bad September, right? These are serious people claiming unserious things. This cryptocurrency market is only 10 to 13 years old. Okay, that's Bitcoin. A lot of other altcoins don't even have 10 years. And they're talking about periodicity in such a young market when the N value, if anybody who does statistics, your sample size is so low, it's an unserious claim, right? Any intelligent, understanding sort of individual will say, wait, hold up, what are you basing this on? What's the data? Yet everybody just eats it up. Bad September, or whatever. They talk about seasonality. You can't have seasonality in a market that's so young that I think a year and a half ago we didn't have a correlation to traditional markets, right? People always like to talk about Bitcoin is correlated to traditional markets, to the S&P 500, to the NASDAQ. Do you understand that literally 12 to 15 months ago, they were writing articles how Bitcoin was uncorrelated or had a negative correlation? And after, we have, as Lynn Alden calls, the bazooka effect of liquidity, the money printing, COVID, all these macro factors, pretty much everything was correlated afterwards. But now people say it's a fact. It's kind of like a biblical ontological fact that Bitcoin and cryptocurrency markets are correlated with traditional markets. So if traditional markets go one way, cryptocurrency markets will go another. It's not even questioned, to the point where people establish channels doing cryptocurrency analysis only based on their traditional market analysis, right? So again, it's not about right or wrong, but you just gotta think for yourselves. Be critical, okay? And when you're looking at a system like Elliott wave theory, okay? And I'm not talking about the application of the system, because as I said in the beginning, people will apply it as they see fit, right? Some people will apply it completely wrongly. Some people will do a good job. There is data to suggest that it has been done correctly and it's crazy accurate. Just look at AJ Frost's own work, and he gives a lot of examples in this book. It's pretty dead on, and you can use it quite well. Ralph Nelson Elliott used it quite well. That's how he got people's attention, because people thought it was impossible at first when he started publishing or talking about this, and then he showed them examples. Gann, right? Gann did his analysis using his system, and it blew people's minds, and he was sort of criticized, but then he demonstrated the efficacy of his system and how he could beat the market repetitively, to a statistically significant extent, where people were like, okay, we have to listen to him. We may not understand why this works, but we have to listen to him. So I just want to preface everything with that, because some people think, oh, if you're not looking at macro things, the macro, but the recession, but this, but that. It's like there's something else. Whether you understand it or not, markets move in other ways. People say, well, Bed Bath & Beyond, that's a meme stock. There's no way it should be going up. It should be going out of business. There's no way that stock can go 400%. They don't understand the way the market moves. The market doesn't give a fuck whether or not Bed Bath & Beyond is printing too many coupons and nobody's going into retail stores anymore. It's something else. Something else governs this movement, okay? So that's all I wanted to say on that. So with that being said, I want to talk about housing really quickly. Okay, that's the segue. And what do we have here? Whoops. Sorry, one sec. What's going on? Let me go back. Okay, I think... Okay, here we go. This is stuck. Okay, let's leave it stuck. It's okay. Let's leave it stuck. This is all I want to look at anyway. Okay. Now, my friends, this is a chart, right? Because we look at charts. We do technical analysis. I'm not talking to you about what Powell is saying, what Lynn Alden, I think Lynn Alden's brilliant. I think Will Clement is brilliant. But technical analysis is technical analysis. And it should only necessitate an analysis of the chart. Everything should be there. That's the power of it. Because if you're doing fundamental analysis, the question is, what should you look at? How much emphasis to place on what factors? How important is what's going on in China and their economic collapse versus what's going on in the States versus what's going on in Europe versus what's going on in the aggregate? How important is that? How do you make sense of all of this? And then at the end of the day, what people typically do, they'll do this all the time. They'll see a result, and then they'll retroactively assign a cause. And so what you want to do, and Wyckoff talked about this a lot. I talk about Elliott waves and Elliott principles and stuff like that. But at the end of the day, principally, fundamentally, these technical these systems of technical analysis are all the same. They understand that there's an underlying pattern that the markets make that are divorced of these fundamental kind of macro events, right? And so Wyckoff always said, look for the cause in the charts. And if you properly identify the cause, you will properly be able to predict the effect. Because that's pretty much what we're trying to do. We're trying to predict with a high degree of probability what's likely to come. So this is the real residential property prices for the United States. Okay, I'm looking at the United States because I'm an American. I live in the United States. I may want to buy a home with my profits, right? Or my wife may want to buy a home, or whatever. My mother may want to buy a home, okay? And why is it the real residential property? For those of you who may not know, real versus nominal means inflation is factored in, okay? It doesn't make any sense to just look at the dollar value because the purchasing price of the dollar isn't the same as it was 100 years ago, okay? So the real value, real prices take into account inflation, okay? And what do you see here? For people who look at charts as much as me, you'll notice a 5-wave movement, okay? Let's actually see if we can't mark this up because I want to annotate this. So let's go into this. Boom, boom. Let's see. I've got it here. Hopefully we can mark it up here. Okay. We should be able to. Okay, here we go. So let's mark it up. I don't know if you guys see this, but I see 5 waves. Do you see 5 waves? All right, from 1975 onwards, I see this as wave 1. I see this as wave 2, down to the golden mean to between 0.5 and 618. I see this as wave 3. So basically, wave 3 is going to be approximately 161% of wave 1, which this is, I think, right? Let's see. Okay, and then I see this as wave 4, and that makes sense because look, wave 2 is relatively simple. Wave 4 is relatively complex. We have the principle of alternation, or the guideline of alternation, if you want to call it. And this, I think, is an extended wave 5 that we have, okay? So we have our 1, 2, 3, 4, 5. Elliott waves are capable, or sort of so useful to reading all markets. It's not just cryptocurrency, it's not just traditional stocks, but also housing, right? Housing prices, property prices, okay? So if you have 5 waves, then this is a corrective wave quite clearly. And look at this. You went up and you came back down to wave 4. What do we know about the initial break of structure? Your A wave, it typically hits wave 4, targets wave 4 of the previous trend. That's what we got. So this is a 3-wave move, it seems, right? As we have here. And this is your B wave. This is your counter to this. What comes next? An impulse. So when people talk about housing crashes because of what's happening in the macro, this and that, maybe. But you know what's more simple? Learn how to read a chart. Look at the chart, pull it up. If you want to buy a house in America, just wait for a little bit, right? Maybe it'll take a couple years. Maybe it'll take a few years. Maybe it'll take 1 year because it's an impulse and it goes fast. But you want to buy the fear. You want to buy this drop, okay? I wanted to show you this, not because I'm talking about real estate, because this is a housing market channel, because this is technical analysis. This is an Elliott wave. I use Elliott wave, okay? I do technical analysis and I use other ways of looking at the market, but my principal kind of expertise is in Elliott wave theory. I wanted to show you how you can pull up any freely traded asset, like housing prices, right, on an open market where people are buying and selling, and you can see the wave principle. You can see 5 waves. You can see a 3-wave correction. Guys, isn't that amazing? Right? So I wanted to say all of that, and I know most of you guys came on to see me or hear me talk about Bitcoin in the market, and I'm getting there, to say this. The same skills you use to read housing prices or whatever, you can read the crypto market, okay? And so here we have the total cryptocurrency market cap, okay? The total cryptocurrency market cap. And let's see, 1 second. Whoops. Sorry, 1 second. Let me full screen this again. Okay. So this is the daily chart. And what am I seeing here? I'm seeing 2 things that stand out to me. As somebody who looks at charts all the time and is aware of different patterns, this is not 5 waves as most novice chartists will have you believe, right? They're doing something like this. 1, 2, 3, 4. A 5th wave is coming. Like, that's not how you read this chart, okay? And the main issue with that is right here, okay? You can zoom in and try to count 5 waves here because remember, it's all fractal and you will have difficulty doing that. You will also have difficulty counting 5 waves here. The easiest and most simple sort of count, right? And usually it's the simplest count, the simplest thing, the thing that jumps right at you is usually what's going on is really paying attention to this right here. Sorry. Pay attention to these. And you can also see these emphasized on the volume, right? You can see the volume really showing up at these 2 spots. What are those? For those of you that are more advanced in technical analysis in Elliott wave theory, you'll know exactly what this is. This is the median of a zigzag, okay? A zigzag is a move, it's a corrective move where there's 3 types of corrective move. There's flat corrections, there's zigzags, and there's triangles, okay? In Elliott wave theory. Flat corrections come in a lot of different shapes and sizes, but zigzags are usually just like this, right? Usually you have an intermediate correction between the 0.5 and the 618 of that initial wave, okay? And you get 5 waves here, 3 waves here, and 5 waves here, okay? That's your zigzag. So this is likely, and shout out to, what's his name? There's another Elliott wave analyst on YouTube that properly identified this. I forget his name. If I think about it, I'll shout him out. But this indeed, I think, is most likely a double zigzag. So a WXY here, and then an intermediate, and then a WXY. Two WXYs. You do see those in the market, okay? It's tricky, so most people get caught unawares, right? But that's what you got here in the whole cryptocurrency markets. This is why this drop was so lethal, okay? So that's how you count this impulse. Okay, remember, because this whole thing is an A, B, C correction. This impulse was a double zigzag. This is advanced stuff. I missed it myself. I was busy looking at this as a correction, and at this larger move, if you guys are subscribed and you've been with me for some time, you'll remember that I was looking at this as a consolidation reversal pattern. I thought that this was that. And so I started buying over here, okay? And that's still fine because the name of the game is attrition. The name of the game is attrition. It's a game of attrition. Who can last the longest? Who can withstand the insults, the assaults, the drawdowns long enough to realize gains and not get shaken out? Okay, most of the people that you see on crypto Twitter and outside of crypto Twitter that have made 8, 9 figures, even 6, 7 figures in the market, it's not because they're trading geniuses and win 60, 70% of their trades and trade on the daily or trade weekly. Very few people are capable of doing that. Very few people do that. Most people who attempt to do that lose. If you have any experience trading, you'll know exactly what I'm talking about. Most of the people that have made any kind of money in this market, it's on a long-term trade, meaning they rode one of these high time frame waves up and then took profit somewhere close to the middle or the end, and that's it. So this is pretty much the name of the game, okay? Whether you DCA, whether you strategically DCA and build positions, you just want to stay in the game, don't want to get shaken out, okay? So what I'm seeing here is, as I've said before, a simple double, a 2 degrees of consolidation reversal. And what really helps this case is the fact that this right here is quite large. It is about 60 days, 61, 62 days of consolidation reversal. It's pitched to the upside, so a lot of pattern traders are thinking, oh, it must be a bear flag, okay? The issue with that is they're not looking at the entire pattern. You shouldn't just be looking at this. What they should be looking at if they're doing pattern trading is this. Does that make sense? What they should be looking at if they're doing pattern trading is the larger inverse head and shoulders, because that is what's important. And it's likely that as a result, let's draw this out. Guys, if you're getting value, please like the stream. Subscribe if you're not already subscribed. Let's see. Okay, let's draw this out properly. So this is what people should be looking at. Way too many people are only kind of focused on this wedge or this channel, this rising channel, and they think it's quite bearish. And it's true that rising channels do exhibit bearish signs. Thing is, they don't always. Nothing always does one thing or another, okay? We all know that there's always a probability of, for instance, this inverse head and shoulders, I think it's 75 to 80% of it, of times it breaks out to the upside, and then other times it breaks down, right? Nothing's 100%. So what I'm seeing is that the total crypto market come to 1.09 around here, consolidate once again before breaking out. And that's when a lot of people are going to acknowledge the power of this Okay, and back to what I was saying about Wyckoff. Wyckoff states it so eloquently. I want to cite Wyckoff. You want to really put all your energy, all your focus, all your sort of analytical wherewithal into the cause, not the result. What a lot of people are going to do is they're going to wait for quote unquote confirmation until this breaks. And this is most likely going to break until around, the total cryptocurrency market is probably going to double when this breaks, right? Because we all know that in pattern trading, and I'm going to switch to Bitcoin in a second to make this more concrete, right? So you're going to take the height of the pattern, superimpose from the site of breakout. So maybe around here, right? You're going to get close to 2 trillion, okay, let's say. In any case, that's when people are going to start to pay attention. And what's going to happen is they're going to start getting in here, but you're going to have some consolidation, okay? And they may get shaken out once more if they get in. And then once again, they're going to think it's a trap. It's never safe. There's never like, oh, you just have to wait until this, then you're safe. There's no risk. There's always risk, This is the nature of trading. This is the nature of sort of playing the markets, yeah? So you want to play the cause, and the cause here is the inverse head and shoulders. The cause here is the consolidation reversal pattern that you can see here. Let's zoom in real quick. And you can see this as an A wave, a B wave, so big A, big B, and then this right here as 1, 2, whoops. Let's see. Oh, here. 1, 2, 3, 4, 5. This is a type of zigzag with this running flat correction, okay? So a running flat correction is a type of flat correction that is extremely bullish, okay? It's particularly bullish because the terminus of your impulse does not reach the origination point, or the terminus rather, of the A wave, okay? So in aggregate, the complete cryptocurrency market cap is really bullish, because if this is an A wave, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5, you see that how do I say this? It's a running flat correction with a B wave that's gone up way past the height of, or the beginning, or the origination point of the A wave. Do you see what I mean? So it's slanted in such a way that it shows you that the market is really keen to go up, okay? So here you have your 2 degrees of consolidation reversal. If you're subscribed to the channel, you'll know exactly what I'm talking about. Any reversal pattern on any time frame needs these 2 degrees of consolidation reversal. This is your first degree, your AB base, as Ralph Nelson Elliott called him. That's your first degree right here, okay? And these 5 waves and these subsequent 3 waves, that's your small a, small b, that's your second degree. You're cleared for takeoff on the larger time frame. That would be consistent with what I just drew, the inverse head and shoulders, okay? If you're a pattern trader, it's not one thing or another. It all should talk. You're seeing this. That's what you're looking at. Trade the cause, not the result. You do not want... Obviously, this pattern's only confirmed once this neckline is broken, okay? So you can do that. But again, be very careful, because there's no such thing as a free ride. You can come up and then come back down. You can do whatever, right? The market is capricious. I don't know if there's ever been a pattern that's played out exactly the same way ever in the history of any market. So the idea that there's a safe way is false. You just have to use probability. And again, it's likely that this is an inverse head and shoulders. It's likely that that's 2 degrees of consolidation reversal pattern. It's likely that if you turn on your momentum indicator, your stochastic RSI on the daily time frame just crossed bullish. It's likely that the hash ribbon indicator signifying minor capitulation on Bitcoin, flashing a buy signal for the first time in I don't know how many months. It's likely that all of these things leads to a huge breakout. And most people underestimating, once again, this move, because most people can't read these moves. Most people only read this stuff, okay? Everybody knows that's up, everybody knows that's down, but then by that time, a lot of times it's too late. It's too late to build serious positions by then, right? It's too late to really make positions that will be consequential. So even though, like I told you, I made the mistake of reading this as a consolidation reversal, and some of my positions are underwater, but not all, some. It has no, I don't care. Why? Because if this indeed is what I think it is, and we eventually go up, this will be a great buy. This mistake that I made months ago in April of 2022, I'll be patting myself on the back for, because that'll be a great buy compared to where we're going. Do you see what I mean? It's all a game of attrition. It's who can stay alive the longest. And the best way to stay alive is to buy spot. If you're going to be brave or daring enough to buy on leverage, to have a liquidation point, then you need to be more skillful, more careful. You need to protect your positions, play defense, stay alive. And if you can stay alive and this happens, you will make life-changing wealth. It's not a question of if, it's a question of when. And when this breakout comes, it will be fast. And it's been a long time since we've had positive price action, my friends. Like macro positive price action, high time frame positive price action. So people don't remember. This move that we've had since June 18th, right? And we've been kind of matriculating upwards in a corrective fashion. People think that's what it is. No. The positive price action that we experience in bull runs is so fast that it's hard to catch the move. This is precisely when you do so, okay? So it's highly likely that this indeed is one large zigzag, one large WXY, okay? And the math shows this. The math sort of, the math supports this. So if you take your Fibonacci extension tool, I'm on the log, by the way, so I'm accurately and faithfully representing all this price action. Whoops. Okay, what is going on? I'm trying to get the magnet to catch. Okay, so I have my W, I have my X retracement, I have my Y coming down to between 1 and 1236, wicking down even below the 1 and 1236. That's what you should expect for these extensions, okay? Between the 1 and 1236, maximum the 1618, but anywhere in this region right here, between the 1 and the 1618, is typically the terminus, the last sort of the end of these corrective waves, okay? Now let's go to Bitcoin and let's talk about this more concretely. And this is why I wanted to go live, because I haven't spoken to you guys in a while, and there's just a bunch of ideas ruminating that I felt the 20 minutes of the update wouldn't necessarily do justice. So here again, you have in Bitcoin a similar pattern. And let's actually get rid of this, all of this. And here I'm seeing the same thing. Do you see this? You can't count 5 waves with this. Like, you have to be, this is an elephant. That's not a little thing. That big wick right there is not something that you ignore, and it's not something that you typically see in a regular 53535 advance, okay? And if you turn on your volume indicator once again, you will see that volume spiked significantly to an extent where I personally, when I was reading this at the time, thought that this was a capitulative move. It was, but I didn't know what we were in. I didn't know we were in a zigzag. I thought this was the end of the trend, and I actually took some longs from here that I was surprised got stopped out on the move down, okay? But this is exactly what you see in a double zigzag, okay? Again, WXY right there. Use math, use your tools to try and, gain an edge and understand if it's the end. Once more, you take the W, the retracement of X and Y, your target is between 1 and 1, 2, 3, 6, almost exactly here. That's exactly where you're consolidating and you're reversing, okay? And since then, what you've done is you put in, once again, 60 days, up until now, it's about 65, 66 days of consolidation reversal, okay? For people who think that this is the same thing as this, that's fine, Not everybody can read charts. But if you can read a chart and you see a double zigzag and you know that a double zigzag even exists, then you're buying like mad, okay? And you're waiting for that breakout. And let's just, for the sake of, because we're in the live stream and we can do this, we have the time, let's go in. Guys, if you're getting value, please like, share, and subscribe. This is the stream I wish I had. This is the content I wish I had, where the emphasis is on education. It's not necessarily on force feeding my ideas or a way of looking at the markets or a buy or sell signal. It's just, growth and understanding and learning and how to go about that. So, you'll always see me re-referencing these manuals because it's important. You should never stop learning. I'm trying to get into... Sorry, one second. Okay, here we go. There we go. Okay, double zigzag. Okay, let's just go zigzag. Okay, so this is, again, the wave principle by Bob Prechter and AJ Frost. You can get this on Amazon. I just will remind you that this is an advanced manual on Elliott wave theory. If you're just starting out, it's probably best to get something like Elliott Waves Made Simple. And you can find that on Amazon as well. That's a little more palatable for beginners. This is really deep, and you might just get lost or put off completely. Okay? So again, the zigzag, it's a 535. Okay, and you can see it's just like I showed you, A, B, C right here. It's a three-wave move, and this is a single zigzag, right? But there is such a thing as a double zigzags, okay? And you can see here, occasionally zigzags will occur twice, or at most 3 times in succession, okay? I've never seen a triple zigzag. That must be hell. Particularly when the first zigzag falls short of a normal target. In these cases, each zigzag is separated by an intervening 3, producing what is called a double zigzag, okay? So here's what we're looking at with Bitcoin. So, right, I showed you a WXY, or however you want it. Yeah, it's a WXY, and I guess I like to count it WXY, and then an intervening X, and then a WXY again. But he's doing ABC, and then whatever. I don't even know. How's he doing it? He doesn't label this intermediate part. But I think it makes most sense to count it as WXY, and then ABC, and then WXY. Or whatever in the middle, if it's a complex correction, count it as WXY or WXYXZ, whatever it is. I think for us in Bitcoin, it was a triple 3 in the middle. But yeah, you can see this in real life here in the Dow in 1975, July to October 1975, right? So, yeah, these are real things that happen, and you can look them up, okay? It's not just... And I encourage you, if you're really serious about this and using these tools, using this tool, this analytical tool, way of looking at the markets, learn it, master it, do your best. It'll pay off. I guarantee you, right? Watching videos like this one may help, but I hope that I can inspire you or encourage you to do your own research, do your own homework, because at the end of the day, that's what's really going to help you. Not anybody's call, not my call, not anybody else's call. Like I told you, I made the mistake of calling this a bottom because I wasn't reading a double zigzag, okay? And I was reading a regular flat correction, and I lost some positions, but I started rebuilding my positions over here, and I'm fine, but that was a mistake. And I think a lot of people made that mistake, but whatever, it is what it is. But at this point in time where I'm at, with what I know now, I may not make that mistake, but at the time I didn't really see or feel or think about double zigzags as much as I do now, right? So word to the wise, do your own homework, try to be the best you can be in analyzing these markets. Okay, so that's the macro view. That's kind of what I'm seeing. I am once again seeing a massive move in Bitcoin coming very soon, because I do see 2 degrees, just like I showed you in the total cryptocurrency market cap. You can see in Bitcoin, and I have it annotated here. You have your A wave, 3-wave structure right here. Okay, and then your corresponding B wave, which is a composed flat correction, okay? And this is what you would call your first degree of AB basing, okay? And then your second degree of AB basing comes here. This is a 5-wave structure, okay? That's not 3-wave, this is 5-wave. So if this is 5 waves, I know that this is what we call a zigzag. So it goes 1, 2, 3. Okay, so remember, a zigzag is a 5-3-5 structure, and typically your target is 1 to 1, 2, 3, 6. So if we take this, actually let's label this. Guys, again, if you're getting value, please like, share, and subscribe. Let's label this. So this would be W, okay? This ABC flat correction would be X, and then Y would be most likely up here, okay? And so again, we would want to target between the 1 and the 1, 2, 3, 6. I have seen zigzags hit the 1, 6, 1, 8 and a little bit above, but typically it's between 1 and 1, 2, 3, 6, 1, 6, 1, 8 at the max. So let's take our trend-based fib extension and retracement of this flat correction. And so I think it's very likely that we come and hit the 1618 right there, which would take you to 31K, which would bring you to this level right here, okay? Just straight out. I think a lot of people are underestimating this move. And let's even put, let's make this visible. A lot of people are underestimating this move, right? Like they see this as like a, yeah, well, it may take us to 23,000, because if you look at this right here, this wedge structure, okay, that broke down, people are saying you're pretty much at best going to retest right here and then bounce back down, okay? Right? But if this is what we think it is, we will find some resistance, but not much, right here, and then continue on. And it's very likely that we come up to this point right here and make this higher high right there. Make that higher high right there. So you should have something like this in this zigzag. Again, you have 2 degrees of AB basing, and this, and you typically see this in these consolidation reversal patterns where if you get a zigzag or you start forming a zigzag for the 2nd degree of consolidation and reversal, the last wave of that corrective pattern ends up being your wave 1 of your impulsive move. Okay, we've seen that before in analysis, and again, people are only looking at this as a, why can't I? Okay, what's going on here? Let's try this again. People are only looking at this as a rising wedge, but it's not. You want to look at it more like this, kind of like we looked at the total cryptocurrency market cap. It's one big head and shoulders that's likely forming. And so your next target on the high time frame is actually 32K. Okay? And you've seen head and shoulders. Actually, let's put it in. First, what I want to do is this. Let's see. Hey, cool. What's up? Been a long time. David, what's up? So you don't think it's an expanded flat? If it is expanded flat, we're still in wave 4 going into wave 5, David says. David, like I said, it can't be an extended flat, because what do you make once more? I'll ask anybody who thinks that. Oh, wait, I'm not exactly sure what you're talking about. Are you? Oh, I think I know what David's talking about. Let me just address this one more time. I did, if you want to rewind, address this, but I'm just going to reiterate this because it's an important point. People are saying that this entire thing is an expanded flat. An expanded flat is anytime your B wave goes above your A wave. Okay, and that is actually regular. That's what you typically see in markets. Your B wave typically breaks the plane of your A wave. Nothing special about that. Nothing out of the ordinary about that. Now, this is indeed a flat correction. Okay, it's an ABC flat correction, right? Now, this is complete. You can use math to prove it, that it's very likely complete. How can you do that? 2 ways. If you take this as a big flat correction, which people, admit to this being a flat correction, this is clearly an A wave, right? This retracement is clearly a B wave. And then you get a C wave. This impulse, whether you can read it or not, is an impulse, and it's a C wave. Where does it hit? It hits the 1618. That's what you typically get in those flat corrections that are a little aggressive, where the impulse goes a little further than usual, okay? And what's usual? Usual is 1 to 1, 2, 3, 6, where you get a symmetrical flat where, it looks like this, okay? This is kind of an aggressive flat correction, okay? That 1618, again, is very important. That's your golden mean. That's your golden ratio, your phi ratio. That was hit. Math says that this pattern is complete, okay? That's one way you can prove it to yourself, just mathematically, okay? The second way, okay, I'm going to show you this one last time, is looking at this being not what people are counting this all wrong. 1, 2, 3, 4, 5. Like, first of all, like, this shit doesn't go on forever. Trends, nothing goes up forever, nothing goes down forever, okay? You can't just keep going down. And there's also something to be said about what do you do with this and this, right? Apologies for people who just heard this. I'm repeating myself, but this is very important. You can't just ignore things that are so blatant. These are massive wicks, strong buying signals. This is obviously a three-wave move. The only way that you can make sense of 2 3-wave moves is in a double zigzag. Rewind, and I talk about how double zigzags occur, and I showed an example in Prechter and Frost, July to October 1975 in the Dow Jones Industrial. You can see the same thing. And this is essentially a WXY. This is your impulse, and it's finished. And lastly, if you, once again, just use math and probabilities, you can take this W, the retracement of the median X, and you can get your typical target for a C wave, or a Y wave, if you will. That's between the 1 and the 1, 2, 3, 6, right? Typically, your flat corrections, your zigzags, end between the 1 and the 1, 2, 3, 6 wave extension. Okay, and that's what you're getting here. So math says this trend is up. This is finished. So you should start trying to eye reversal patterns here, right? On the small time frames, on the smaller time frames, you should be able to see that this is forming a kind of rounded bottom right here, right? Where you're getting your inverse head and shoulders, okay? So that's the last point. All right, now let's look at this really quickly, and then we'll talk about the target at 32K. Okay. In terms of timing, there is something to be said about timing. What we want to do is, you're not just looking at, and I've said this before on the channel, you're not just looking at price, you're also looking at time, right? Why can't I do that? Right? It's a 2-axis game. You're looking at time versus price, price versus time. So you really want to consider both. And in consideration of time, what I'm going to do is I'm going to go into my Fibonacci time, trend-based time, okay? And I'm going to take this 5-wave structure, retracement of this 3-wave structure, okay, and I'm going to see any major important points that it may fall. Okay, so the 618, or sorry, that's the 1. The 1618 is on August 30th. Okay, it's likely. So that's the end of the month. That also coincides with 2 or 3 days or 4 days after the full moon, or after the new moon. The new moon typically represents a local market top. The new moon, I believe the next one occurs on August 25th. So the 30th, 0 to 3 days after, data typically shows 0 to 3 days after the new moon rather, you reach a market top. That's more or less around that time. So I'm going to put this Y at the 30th of August around 1618 time fib base extension. And again, that's an extension based off of this previous 5-wave structure, as well as the retracement of this B wave, this compound B wave, right? This composed B wave, right? 1, 2, 3, flat correction. It's likely that this pop up and out, okay? And we get the higher high ever so slightly. And again, I wouldn't be surprised, given how this is a macro trend reversal, we target the 1618 and even wick above it ever so slightly before starting to retrace, okay? And that would represent for Bitcoin a 52% move, okay? And a lot of people are underestimating this once again because it makes sense, you know? We haven't moved impulsively and violently to the upside in a very long time. So it would shock the market, shock the system, and a lot of people are going to jump in at these points. And once we start consolidating at 30K, may take us about as long as it took on the way down, which is about 30 days, okay? And I would not be surprised if that happened. Again, don't be surprised to see symmetry. The market loves, it's aesthetically regular, and it loves symmetry, okay? And you can see that throughout. And we're going to look at some other assets and look at the symmetry. So this is what I'm looking at. This move, and we're going to jump into the smaller time frames in just a second, but this move, I'm seeing by the end of the month, sometime, it's likely that we hit 32K, and then for a month, I think we consolidate to pretty much gather prices. And a lot of people, once they see this move, are going to say, okay, maybe this isn't a bear market rally. Maybe there's something to this, okay? And if you are one of those who, hey, look, it's Mickey Mouse. I see Mickey Mouse everywhere after my trip to Disney World. If you're one of the ones who looked at the cause, okay, and were able to successfully read this cause, you're well into profit. All the hard work you've done is here. Over here, all you're doing is adding to your positions, if that, okay? Maybe you're making new positions, but, you can, look, do you see this? Wick down. Don't be surprised if you get a wick down like that, okay? You just don't want to get shaken out. Do you see what I mean? Okay. Let's throw on some EMAs just to get bearings and see what the EMAs are showing. Again, on this channel, I like using only fib numbers for EMAs. Okay, so that's the 21 is the yellow, the 55 is the blue, the 89 is the red, and the 144 is my long EMA, or the green. Okay, and yeah, I don't know. The EMAs aren't really showing me anything on the daily because, yeah, there's resistances, but that's why you have a 5-3-5-3-5 advance. It doesn't really matter to me how it moves. I'm gonna look on the weekly, and the weekly. What does the weekly show? So this is what I want to show you guys. You see that? I promise you, I did not look at my EMAs in advance. What do the EMAs say? The EMAs are telling us exactly what I showed using pure price action and Fibonacci extension tools. The EMAs are showing that indeed there's going to be important resistance around. So if you project this, right, if these keep moving down in that same way, around 32, 33, right, wicking above the 1618, making the higher high here, and then it's very likely that we come back and retest these ever so important EMAs in this zone. And again, don't be surprised if you get some sort of symmetry where you're retesting this 21 EMA on the weekly and this 55 EMA on the weekly. Do you see what I mean? Like, just keep it simple. It's like a pattern game. It's a pattern game. And it takes patience. This is where all of this is tough, and most people get shaken out because they're so obsessed with that guy on Twitter that claims to be making 300% on 35x, shorting and longing, right? That's a low probability affair. Trust me, I can tell you from experience. Most people lose money that way. The way you want to get rich, it's by waiting people out, by making high time frame reads, building your positions, protecting them until the large move is made, and then continuing to protect them, and then taking profit at a reasonable time where the trend is likely exhausted. That's the name of the game. It just takes time, and people don't like waiting. We've waited for about 450, 460, 470 days in this larger complex, or this larger flat correction right here. Do you see? Like, all of this has taken quite a long time. And it's confusing because, again, it's a flat correction. If you can't read price action, you don't know what's going on. But that's 470 days of up and down price action, right? How do you build a position with no kind of perspective on what the market's doing, okay? Here, you think crypto's a scam. Here, you think it's even a bigger scam. Here, you think, you're a genius and it's the best thing since sliced bread, it's tough, right? And how many people put in time, hours, days, years into learning a skill like Gann, like Wyckoff, like Elliott, and reading the charts and building positions and knowing that, okay, even though they built positions and some of those positions are underwater, they're going to be financially secure and financially free for the foreseeable future as a result of their actions, right? Like, who can put in time and effort now for delayed gratification? That's who wins at this game. It's a game of attrition. So I can come on every day and this is a daily show, but I hope that in the time that I've gone and shared my analysis and shared my ideas on the market, you all understand the real game is not a daily game. It's not even a weekly game. It's a monthly game. Okay, so let's jump down into small time frames, right? And look at what's going on. And see, any more questions? Let's see. Guys, don't forget to like the stream and subscribe if you're not subscribed. All right. So let's jump down into the 4-hourly time frame. Get off the log because we don't need it. Let's get rid of this. Don't need it. Okay, so looks like... Actually, let's jump down into the hourly time frame. Again, look at the symmetry. It's aesthetically consistent. Do you see that? You have this level here. You're recreating that level here. This is a picture perfect, kind of textbook W reversal pattern. Okay? Without knowing any technical kind of Elliott wave corrective sequence or whatever, you can see you have this W, some price action that's doing much the same as it did on the left shoulder on the right shoulder. And that should yield a reversal in the same way that you got a drawdown. Do you see what I mean? Sometimes you could just simplify it. Just look at geometry. But if you were to break it down technically, this is your initial break of structure. This is your automatic rally or automatic reaction, as the Wyckoff people call it, right? Or your A wave. Okay, so that's big A. This is a zigzag, big B. Okay, this is small a. I think. Sorry, my pen is acting up. Let me try again. Okay. I don't know why my pen won't register. I believe it's not registering. Okay, anyway, I'm not gonna waste time on that anymore. You get... Yeah, it's straight up not registering. Okay, neither are my tools. I don't know what's going on here. Let's try again. Okay, this is my big A, this is my big B, this is my small a, this is my small b, and my impulse starts here. Okay? Now, how to read this impulse? I don't really know. Is this a 1, 2, 3, 4, 5? Perhaps. Perhaps. But it wouldn't make sense really, because if this can't be complete. Why? Because this third wave is about the same size as this first wave, which would mean that your fifth wave has to be extended to at least 161.8% of the first three waves, retracement of the fourth. Okay? So basically, I'm not exactly sure how to count this, and it's not important. What's important is that it's likely that this is impulsive, and that your next move is up and up significantly. And if let's just assume it's a leading diagonal, and that this is wave 1 through 3, retracement of 4, you should anticipate something between 22.6 and 23k before any retracement. Okay, and that is somewhat consistent with, no, it's much more than this pattern. Let's say this pattern is this. Yeah, it's about the size of this pattern. Okay, you see what I did there? Here, let me show you what I did. If you don't see, I just did some pattern analysis. I'm going to show you my neckline, and I'm going to show you what my pattern is. Okay, so let's do this together. Let's draw it out properly. I'm going to take it from here as my left shoulder. Okay, again, this is a variety. This double W pattern is a type of inverse head and shoulders. It's a reversal pattern, and it typically breaks to the upside. And the confirmation actually is the break of the neckline, which you've already gotten. So technically, this is confirmed, right? Again, the technical confirmation of an inverse head and shoulders is the technical breakdown of the inverse head and shoulders is the not technical breakdown. The technical confirmation is a break of the neckline. So Rosa says, I followed your last 30K call and I got wrecked heavily. Thank you. So this is exactly what I was talking about. Like, if you're going on YouTube and following somebody's call, first of all, I never told anybody you need to trade this. I'm still in my trades. Thankfully, I didn't get shaken out. But it's not a certitude game, okay? I still do think we're going to 30K and breaking 30K, okay? I wasn't able to see exactly how. I'm going to zoom out for a second, and I'm going to get back to this. I'm just going to address Rosa's sort of complaint. Wasn't able to see exactly how this would play out, okay? I didn't see this coming. I thought that consolidation, this was going to break out in such a way, okay? Even still, the larger thesis remains that this is likely a consolidation reversal pattern leading to higher highs. We've been making higher highs since June 18th. And what do I mean by, before I went on vacation, I said don't get shaken out. The whole idea is not to take on too much risk. Too much risk where you got wrecked. Like, if you're literally buying the bottom, why not buy spot? What's wrong with buying spot on something that's projected to go into the millions, right? Buy spot in multiple positions. If you're going to take a leveraged position, take it on low leverage. If you got wrecked with this move going down by this much, right, and you're zoomed out and trading this large time frame, then your margins were too small. But I'm not telling you technically trade this, trade that, here's your stop, here's your long. Like, the whole purpose of this channel is to share my trading views, to share my ideas, and a lot of those, and I keep saying them, they're sort of based on a larger time frame for how to win this game of attrition. So Rosa, if you're getting wrecked, I'm sorry, but like, you're not doing it right. Did you have some spot positions, more spot positions than you did leverage positions? If so, then that's fine. And if trading's a business, then that's a cost of doing business. If you put all your eggs in one basket on leverage, then you're doing it wrong and you have not understood anything about risk management. I'm really sorry, but you gotta learn that kind of stuff. I keep talking about it too, right? No one channel, no one trader get to 100% of the calls right. That's not the whole point. The point of trading, technical analysis, and doing all of this stuff is to get a high probability view of what the market's likely to do, and then trade accordingly using good risk management. So I'm really sorry you got wrecked, but I think you misunderstand what we're doing here. This is not buy now, oh sell now, use this. Did I give you for me to give you a trade setup, I would have to given you an entry point. I would have had to give you a stop. I would have to given you a take profit. If I didn't give you those three, then I didn't give you a trade setup. And if you mistake, I think it's going to this level, which I still do think it's going to this level, for buy now and put your stop here or don't put a stop, I'm sorry. Okay, so yeah. I hope nobody gets wrecked, but sometimes that's just how you learn, right? That's how you learn. Again, there's no shame in buying spot positions at a macro bottom. Again, there is no shame in buying spot positions at a macro bottom. What are we dealing with? Greed and fear and greed. Maybe we get greedy and we try to leverage our buys, right? Instead of putting your margin at 1x, you want a 3x, 10x, 15x position, but understand that you're incurring risk. Why don't you take 90% of your portfolio and put it on spot and not worry whether the price goes up or down, but it's very likely to go up, and then wait a few months and take massive profits, more profits than you've ever made, in any position, in any paid job that you've ever had. And then maybe take 5 to 10% of your portfolio and play the leverage game and understand the risks. Risk management. Stop blaming other people for, you can blame me all you want. It's not going to do anything, right? But I'm talking because I want to help. I really do want to help, and I hope you reach your goals and you are able to help yourself and you help your family, help your community. I really do. I hate celebrating other people's losses. I don't do that. It's not in my nature. Even the most obnoxious trolls on Twitter, I don't celebrate anybody's demise, anybody's failures. But you have to understand that the name of the game is risk management, Rosa. Risk management. And so by understanding that, most of what you take is on spot. Okay? You always have some spot positions. And if you're playing the leverage game, you understand the risks that you can get shaken out with a move like this. But still, how'd you get shaken out look at this, Rosa. I'm looking at Bitcoin. Since June 18th, what is this? Okay, let's look on a smaller time frame. This is hourly time frame, right? Whoops, I'm not looking at the right chart. Since June 18th, right? We've been going up. If you draw a simple channel, we haven't broken the bottom of the channel. You haven't broken market structure. If your stop was way up high here, look at this. That's a possibility, right? Guys, come on. The last thing that's useful to you is blaming other people for your problems. You're never going to solve them. You don't take responsibility. Quite literally, break that word down. Responsibility, the ability to respond to a situation. You have to own it before you can change it. If it's me or some other YouTuber or some condition in life or the Fed that is controlling, your life or your trade, then you're never really gonna get out because you're always going to have a scapegoat. Do you understand? Right. That's enough of that. All right. Back to what we were talking about. This, on the small time frames, is a W reversal pattern, okay? And again, you can see some symmetry here. It looks like an inverse head and shoulders, and the target is simply the neckline, which I'll take as being right here, from the bottom, superimposed from the neckline itself. So I think we go up here. around 22.8, okay, before consolidating once again and then continuing the move up, okay? So that's what I'm seeing on the smaller time frames in Bitcoin. All right, let's see. Now. Let's look at some other assets. And okay, one of the reasons, this move to the downside is most likely confirmed as a bear trap is just looking at other assets in the cryptocurrency markets. We understand that cryptocurrency markets are heavily correlated to one another, okay? Bitcoin's the most market dominant, but if you look, you can see some strong movement. Let's look at two things. Let's look at crypto bubbles, okay, if you guys don't know. Crypto bubbles, right? It'll tell you the state of the market basically in graphical form. It's pretty neat if you haven't looked at it. But just looking at the top 100 here, you can see big moves in this market, right? So this is market cap on the daily, right? So it shows daily moves. The green bubbles are positive price action moves. The red bubbles are negative price action moves. Most of the bubbles are green. The biggest movers are Hex and Lido Finance, EOS, BNB, Shiba Inu, so on and so forth. You can see it. But it's just, I think this is a great way to kind of digest market moves, okay? But we can also just look at our watch list, and you can see that the bigger movers are any Energy Web token. I mean, this is just proof positive that little bit of drawdown right here that we experienced on the 19th resulted in a massive uptrend that completely dwarfed the drawdown, okay? And Moon River, the other one, you can see on a smaller or on a larger time frame, this consolidation reversal pattern that essentially looks like a type of inverse head and shoulders once again. You see these reversal patterns like that, yeah? Same thing in Balancer, one of the bigger movers. Again, you can see your left shoulder and your right shoulder forming, okay, for your inverse head and shoulders. So you can see this throughout the market. You had this move to the downside in these past few days, but you can see the markets are showing you that in EOS, for instance, that drawdown of the past few days has been dwarfed by the positive price action, okay? So it's likely that you can get the same thing. You do get the same thing in Bitcoin. You already see the move in BNB. I think BNB is already in impulsive price action, and this right shoulder was just a wave 4, a deep wave 4 retracement in a leading diagonal, okay? So you can see it in the rest of the market. So finally, we're going to end the stream in just going down our spot trades. Again, the spot trades that I have is pretty much everything I have exposure to. I've bought and I currently hold positions in each and every one of these assets, so I'm currently monitoring them, okay? So Bitcoin, we've talked about, we're seeing this as our inverse head and shoulders. Our next target, goodness gracious, our next target is, I see this as basically the head, this massive head right here. Our next target, I think, is 32. I think we make the higher high here, okay? So that's Bitcoin. Litecoin, I see this. This is the right shoulder, something like this. I see us doing something like that, okay? And again, just kind of like in Bitcoin, you have 3 waves here, 3 waves here, okay? And then 3 waves here. So that's This is big A, this is big B, this is small a. This is small a right here. Okay, and this I think is small b. You have a running flat, kind of like you have in the total cryptocurrency market. You see that? I think this is small b, quite clearly. 3 waves here, three waves here, and then you have your impulse there. So I think what you're going to get is a move up here, making that higher high. Okay? And then you clearly have your inverse head and shoulders. Okay? So my target for Litecoin is around 80, the next target. And because this is, so unlike in Bitcoin, let's see, is this unlike Bitcoin or is this like Bitcoin? It may be much more like Bitcoin than it's not. Let's see. It's very much like Bitcoin. This is a zigzag as well. Do you see that? So this is a 5-wave move here. Okay? And this is a 3-wave move. Okay? And actually, when I blow it up here, it doesn't seem like a running flat. It just seems like a, nice regular flat, but expanded because the B wave breaks the plane of the A wave. But we know that that is what you typically see in these flat corrections. So taking my Fibonacci time-based, trend-based fib time, I don't even know what it's called. It's a pretty complicated name. The first wave, retracement of the second wave. Again, this, let's just label this properly. This is a WXY as I see it, right? So you have this is the second degree, right? For everybody not following, this is your first degree, this is your second degree. Or sorry, this is your A, big B. That's your first degree of AB basing. This is your second degree of AB basing. Oh, it is a running flat. It is a running flat. It is a running flat. This is your second degree of AB basing right here. So this is small a. 1, 2, 3, 4. Yeah, let's say this is a 5-wave structure, but this is the base of it. So the 5-wave structure goes here, or is this 3 waves? No, I think it's 5 waves. If you look at it right here, 2, 3, 4, 5. That's 5 waves right there, starting from here, okay? And so this is your running flat. Do you see that? It's slanted. So typical flat correction, it's nice and even and straight. But the running flat, which is really, really bullish, where the terminus of your C wave or your impulse doesn't meet the base of your A wave, means the market really wants to go up. It's really bullish. And it should show up in the momentum indicators. If you look at the stochastic RSI or the RSI, you should see some strong divergence. It's probably on the 4-hourly time frame given the move. So you would be looking at something like here. Well, it's not too clear in the 4-hourly. There's too much noise. Let's see. Do you see it here? I don't really see it much. Maybe on the weekly. Nah, you don't really see the divergence. But in any case, that's quite bullish, just looking at the price action, okay? Let's go back into where we were at. Too far back. Litecoin. Let's get rid of the momentum indicator. Let's just project this like we wanted to do. So this, again, would be a type of W, X, Y. But you see that X wave, which is your flat correction, or maybe you would say it's you could say it's a flat correction, or it's a type of complex triple three. You could say it's a complex triple three, okay? Doesn't really matter what it is, but it's a type of flat correction. I would say, gun to my head, a W, X, Y, X, Z. You have a triple three that's quite bullish, okay? So basically, it works the same way. You still have, all of this is X. So you're looking at 5 waves, 3 waves, or a variety of 3 waves, or a flavor of 3 waves, and then 5 waves, okay? So if we take our trend-based time tool and we project this, we would go something like, first let's project the price and then we'll do time, okay? So let's do price first. So taking Fibonacci extension tool of this, retracement of the median X wave. The 1618 is at 7729, okay? Around there, thereabouts. But you're making that higher high at the 1618, which is exactly what we want to do if we're in an uptrend and we're looking to make higher highs, right? That's the important bit, which I was stating. You want to make that higher high, okay? So that's the 1618 using price. Now let's do time, trend-based time. And remember, it's always, important to consider both time and price, because that's what your charts are based off of, time and price. Okay, so trend-based time. So down here, your W wave, your X wave ended. Your orthodox low of the X wave was right here on August 20th. Okay, and so the next important, you could say the 25th of August is possible, but that would be extremely quick. But that's possible, okay? 25th of August, 28th of August would be the one Fibonacci. So basically it would take just as long as it did for the W wave, okay? That would mean the 28th of August. And if it took 1.618 times it took for the W wave to form, that would be September 2nd, okay? So that's how that works. So let's say, I would say the 28th of August is probably most likely, just given the moon cycles and everything. Okay, so that's what I would look at with Litecoin, and that's how I would sort of project that next move up. So again, you can repeat this with all the other assets. Cardano's looking good on the daily, high time frame, consolidation reversal pattern. You see this as being the first degree. Here you have the second degree. You're going right into impulse here. You haven't yet gone into impulse. You're still at the base of your consolidation reversal pattern, so this would be your first impulse up. And you're probably going to get some resistance at around 70 cents for Cardano. For Dodo, I think this is moving on the small time frames. Let's see. It's just about to. Let's just give it a second and see if it does move in the time we're together here. And guys, if you have any sorts of requests for any projects you want to look at, definitely tell me, because I'm just going to go down this watch list and then call it a stream. But I'm happy to look at anything that you want to look at as well. So this is, again, on the hourly time frame, small time frame, looks like a bullish pattern, a W pattern, right? Very likely to break up, and the target is likely to be the neckline of this, kind of projected out, so around here somewhere, around 16 cents, right, for the first target, and then perhaps some consolidation for continuation. So just on the small time frame, this looks like big A, big B, small a here, small b. Looks like you started your impulse right here, right? So this looks to me like wave 1, wave 2, wave 3. This looks like wave 4. So it looks like that will be your wave 5 around the 16 cent region. That's what I see in Dodo. Okay, but on the smaller time frames, cool, but like you really want to plan for the larger time frame. And again, appreciate the symmetry. Appreciate the symmetry. Sometimes, you want to bust out the fib levels and, all the different, high level technical analysis that you learn in Wyckoff and Gann and Elliott Wave. But a lot of times it's just the market, nature loves symmetry, beauty. It is very aesthetically pleasing. It's balanced, right? You went up, you went down. You went up, same level. You went down, same level. And then you go up again. At the end of it, you have a nice inverse head and shoulders, nice rounded bottom, reversal pattern for movement, all right? And that would be, when it's all said and done, a consolidation at around 22 cents ish. Okay, so the top of this range. Okay, the question is, how fast does this happen? Now, you shouldn't underestimate it. Will it happen? Will it take as long as it did here? Most likely not. Okay, it's most likely going to be a lot faster. People are going to underestimate the rapidity, the velocity of these moves, because once we enter into actual impulsive price action with Bitcoin, like, hold on, it's gonna be crazy. This same thing with Ethereum. People are like, oh my god, Ethereum. Like, look, at the end of the day, you're looking at inverse head and shoulders, right, on the daily time frame. Like, you're not breaking market structure. People say, oh, it's broken market structure, it looks terrible. Like, what's so terrible about this? Again, look at these patterns for what they are. They're just patterns that are quite regular, quite symmetrical, right? Quite predictable in that symmetry. It's not always easy to see, obviously, but it's not, once it starts forming, you're like, oh yeah, I see that, So that's what I'm seeing with Ethereum as well. You're going to have some resistance around 2000, and then you're going to consolidate a little bit, and you're probably going to spend as much time as you did consolidating here. Let's see. I don't know how long it's going to take, but you're probably going to consolidate a bit and then break out. And then once that breaks out, the next target is going to be 3,600, right? Because that's going to be the height of this pattern, superimposed from the neckline. But that's the high probability read. Is that definitely going to happen? Am I going to put my kid's life on that? No. But this is the nature of what we do. This is technical analysis. It's probabilistic. Again, it's probabilistic. Understand what we're doing here. We're playing probabilities, okay? I'm not saying put your life savings on this and it's going to happen. It's highly likely to happen. Same thing with Shiba Inu, I think. Right? We were saying earlier how, and this is one of the reasons I got into SHIB, right? It's not at all, I don't know what they're doing fundamentally. I just know that they're still around, okay? I know that I haven't heard anything like nefarious or sort of scandalous about the project. So I saw the pattern and I really liked what I saw because I recognized this inverse head and shoulders, right? And it was right here where I bought. Okay, I bought right there and it went up quite a lot and it came back down. I took profit because I had a stop loss, to take profit. so I wouldn't like completely lose all my gains. So I took like, a few $100 on that position and I re-entered here. But essentially all that did was it broke this plane, retested it, and expect that next move to be the measured move of this pattern, right? So up here somewhere around 2.1, 2.2, around 2.2 right here in this region, yeah? So you're just, rinse and repeat. You're just playing these inverse head and shoulders, right? That's what I'm trading. And again, I'm not trading these like, I'm going to take profit here, I'm going to take profit. Like, I'm zoomed out enough to see that this is a high time frame reversal. I'm not fucking taking profit up here. I'm just going to let it ride. I'm going to forget these positions even exist. And I'm just going to let them ride. Yeah, AOS, I got you, Rich. So that's SHIB. Reserve rights. A little different, but not too dissimilar. You pretty much have your big A, big B, small a, your flat correction, nice small b right here. And this whole time, you're holding exactly this level, which is, if you measured it, the 618 of this 5-wave move. Okay, so you retraced down to the 618 and you retest, and finally you break up. So if you're buying reserve rights, you're buying a tried and true bottom right here. And this is another reason I was like, oh, the market it kind of has to reverse, because I'm looking at reserve rights and it's held this 618 golden mean for 70 days now. And I don't think it's going to break anytime soon. So it's likely that small b is going to be the launch pad, right? So that's pretty much what I'm seeing. Big A, big B, small a, small b. It's a composed B wave. Nice flat correction. And then, boom, your next move is going to be up here somewhere around 0.01, 1.48 cents, thereabouts, right? So yeah, in this position, what am I doing? Pretty much, I'm not trading every day. Sometimes I'm adding to my margin. Sometimes I'm adding to my position. A lot of time I'm adding to my margin because I'm playing defense. I'm protecting my position. I'm playing the long game. I don't care how far underwater I am, as long as I stay alive. Like, if I'm underwater a little bit, a few $100s, it's okay. I'll just add to my margin, because my high time frame read is that this is going to go much higher than I ever thought it would go, and I'm going to be well in the profit even after the first impulse. Okay, so I bought somewhere. I've bought so many times. I don't have one purchase point, but I've been laddering into positions around this area right here. So I'm ever so slightly underwater in reserve rights. But, I, again, don't care. All I care about is staying alive for the larger read, because, it's not always easy to read the small time frame noise, but it's better to just, okay, I have a high time frame read. It's likely to play out. Okay, I'm going to take positions and wait until this high time frame read plays out. And if it doesn't, okay, then I know I'm wrong. But then again, risk management would dictate that I'm not putting all my eggs in one basket, and I have such a thing. I have, spot positions, which, it doesn't matter where the price goes, they stay alive. Like Cadina's one of my spot positions. It doesn't matter where the price goes. I'm not getting shaken out. And I'm not selling until this happens. But here, what can you see? This is a double bottom. This is, once again, your... it's not so much an inverse head and shoulders, but more a W pattern, okay? And here are your two vertices, right here. Okay? But you can also see it as an inverse head and shoulders. It's not the prettiest inverse head and shoulders, but this is your left shoulder, this is your head, this is your right shoulder. Boom, right? Seeing the same thing across the markets. Expect that next move to come up in Cadena up to 3.46 cents thereabouts. Okay, so expect it to double because right now it's at 1.7. So that would be about double. So it'd be a 200% gain in Cadena. Okay, Telcoin, same thing. Do you see this? Guys, don't overcomplicate this. Just because it takes long doesn't mean it's not happening. Just because it's slow doesn't mean it's not effective. Just because it takes a while and you had to wait doesn't mean the reader was wrong. You know? I have an investment firm. I use it to invest for my wife, for my mother, for my other business, and for my kid, and to do some charity work, okay? And I have a tagline, or a mantra, or a tagline, if you will, right? A company tagline for EBF Investments, and it's 3 words, and that's also the roadmap. 3 words: patience, perspective, and planning. That's all you need to win in this game. Patience, perspective, and planning. The patience to wait for a move to happen, okay? The perspective to know that you're not waiting in vain, okay? The perspective to know how to read the charts. The perspective to know a high probability from a low probability move. The perspective to understand how to split your portfolio into 60-40 if you're really being aggressive. 60% spot, 40% leverage, right? Something smart. Again, not just because they have a lot of money, just because they have a lot of followers doesn't mean that they're smart. A lot of hedge funds didn't even... My ultra aggressive portfolio spread of 60% spot on 40% leverage is not something most hedge funds did. A lot of hedge funds that, you know, are famous in crypto were 80-90% leveraged. MicroStrategy is 80%, 90% leveraged. Do you see what I mean? Like, that's insane to me. Because if this doesn't work, I have no plan B. And if people are complaining about getting wrecked, are you 90, 80, 100% leverage? Are you mad? Dude, it's called a spot position. Give yourself the chance to be wrong and still be alive. It's all about the people who made it and made a lot of money. Very rarely have they bought the bottom. They bought close. They sometimes even bought the middle. It doesn't matter. They stayed alive. That's what they did. Stay alive, my friends. Don't get shaken out. I keep repeating that. I'll keep repeating that. Okay? Ravane. It's literally just held this base since May. I love this token. You know, this is the patience, right? 100 days of Ravane doing this on this level right here at 0.001 cents. 100 days. This motherfucker is going to pop. It's going to be violent because you can always tell the most violent ones have the most erratic and the most sort of, they pop up and pop back really quickly. This is going to pop, and once it starts running, it's going to run. This is another one of my spot trades. There's no way in hell I would trade this on leverage. It's way too volatile. It's way too erratic. Look at this, the erratic nature of this asset. Guys, leverage isn't always the answer. There's a time and a place for leverage. There's a time and a place for leverage. Don't get fooled by what you think the people, the successful traders are telling you on YouTube and Twitter. Most of them are losing money. Most of them are making most of their money on YouTube subscriptions, on paid advertisements, on sponsorships and stuff like that. Trade 90% of people who trade lose. And when I mean trade on leverage. Use it sparingly. Myself, I almost got stopped out in yesterday's downtrend, or in the past few days. Right, I had some positions that almost got stopped out. As much as I do this as advanced as I am in my reads, I didn't foresee all this volatility, right? And I had to play a lot of defense. I had to add to my margin, so on and so forth. I had to rebalance my portfolio in such a way that I protected my positions. It's not easy, but always have a plan B for trading, which is buy spot, especially at important structural support, and then wait. Be patient. Don't be greedy. Don't be impatient. That's how you lose, okay? Use leverage sparingly. Understand it's very risky. Okay, that's for Vane. VRA, another inverse head and shoulders. You guys see a pattern. We're on the daily time frame just because this stuff takes time, but don't worry. Once we start running, you'll get your kicks. You'll get your fill of upside, positive price action. Everybody's going to be happy, but you will have already built your positions. That's when you rest and you just wait and you do more high time frame analysis as to when to take profit, if you're going to take profit in stages or you're going to wait until 5 waves print or something close to a main important high time frame resistance. You can either also use momentum indicators, right? Like the stochastic RSI on the daily or the weekly, right? Or the monthly, and wait for those to get oversold. There are a lot of things that you can do. But, for people waiting to build positions, building positions take time. You don't just throw in a bunch of money in a position, unless it's spot. But even then, you kind of need time to really build a position and make sure that you put as much money as you want to in a position and you have the margins in the right way you want. That takes time, right? You're going to wait for this to blow and then start building the position. Good luck. Okay, EOS, it's already done. It's already tested the neckline. So again, inverse head and shoulders. EOS is at the neckline. Expect everything else to test the neckline. And I wouldn't be surprised if in an hour at the markets open, right? Traditional markets open, we get a move. Typically that happens. You don't get moves until traditional markets are open for some reason. I've noticed that. Okay, let's do AIOZ for my man Rich. Let's see. I must have that somewhere in here. Actually, no, I don't. I haven't seen it in a while. I used to have it. Let's add it. Okay, let's look at KuCoin. Okay, yeah, this looks a lot like Ravane to me, right? How do I read this? Again, same principles. You're just using principles, and you can see consistency. What should convince you, if anything, of certain theories, whatever theory. It doesn't matter if it's Elliott wave, GAN, Wyckoff, whatever, or like the theory of evolution. Look for examples. Look for examples where that theory is proven correct or consistent. And if you keep seeing consistencies, then there might be something to that theory being true. Okay? And again, the theory on reversals. 2 degrees of AB bases. Okay? How do we read AIOZ or AOZ? Is in the following way. This is an initial break of structure. Happened May 12th, just like most everything else in the cryptocurrency market experienced an initial break of structure on May 12th. That's 3-wave move. That's big A. That's very, very unambiguous. Okay? Then you have a B wave. Okay? A 3-wave move. 1, 2, 3. third wave is impulsive 1, 2, 3, 4, 5. Do you see that? So an ending diagonal, right, in that last wave. So that's big B. Okay, that's your first degree. That's done. Now, here you have small a. Again, a three-wave move to the upside, break of structure. And then again, you have, now we have to sort of change the perspective and remember where we're at. Let's just clean this up a little bit. Remember, we're right there. We're going to turn the log scale on, okay, just to be able to see this a little better. And okay, I can't. Let's take off auto. Okay, let's get rid of that. Okay, now you can see that this, once again, is some type of flat correction, okay? It's not always going to look like this, like in the manual, okay? But the more you read these corrections, the more you read price action in real life, you'll see, your eyes will get acclimated to real life sort of variations of a flat correction and what it can look like. You'll be able to see that this indeed is a three-wave move. This is a three-wave move, and this is an impulsive move down. So when it's all said and done, you have a nice garden variety flat correction. That's your small b. That's the end of your consolidation reversal pattern. You have a 1 degree, 2 degrees, right? Again, big A, big B, small a, small b. 2 degrees of consolidation reversal. At that point, you start your impulse. So, for AIOZ, your impulse, Rich, has started on the 19th, okay? Or the 20th. 19th or the 20th. Okay, so now what we can do, we can zoom in on the 4-hourly time frame. And what are we seeing here? Here's what we're seeing. This is a nice buying opportunity, by the way. 1, 2, 3, 4, 5. Okay, that is textbook leading diagonal. Okay, why do you get a leading diagonal? You typically get leading diagonals upon a large trend change. Okay, it's the price action being both impulsive and corrective all at once. Okay, you have a concerted wave 3 and then an extended wave 5. Okay, and that's textbook. So you have your 5-wave move and you have your 3-wave retracement down to the 618. Remember, in order for it to be impulsive, it has to respect the 618 Fibonacci retracement. So if this indeed is an impulsive move, if we pull our retracement levels, we should see 618. However, there's a catch. You can have certain instances in leading diagonals where the 618 is violated. Okay? Again, this is why trading and charting can be tricky. 90% of the time, you break the 618, you're in corrective price action. But sometimes you can have a leading diagonal that goes something like this, and it is a diagonal, and it's valid, and this is wave 1, and this is wave 2, and wave 2 breached the 618. Okay, so that's what I'm seeing. I'm seeing this almost unmistakably as your first impulse, and this as your wave 2, even though we've breached that 618. Okay, what's actually more important in this case is that we hold this pattern right here, because you broke resistance and you're retesting it, and you can expect to bounce off of it. In terms of time, so that's what we anticipate for price. In terms of time, actually, hold up. Here's another possibility. Let's zoom in even more. Let's zoom in on the hourly time frame. Here's another possibility. Okay, let's try and read this entire move to see just really when the impulse started, because there's another possibility where the impulse started right here, and this is wave 3 and this is a wave 4, a deep wave 4 retracement. So your impulse isn't finished, so you have not violated the 618, and that is just a deep wave 4 retracement of a leading diagonal. Okay, so that is a possibility. Let's count this. Okay, so again, it's all fractal, so we'd be doing the same thing. Here's your drawdown. Here's your initial break of structure. You start counting 3 waves here. That's big A. This is clearly big B. I think big B goes like this. Yeah, something like that. Big B. And then this is small a. And this is small b. Right there. My impulse starts here. Okay? Okay. So this is actually 1, 2, 3. Okay? So that's wave 3. So our 618 is still intact. Right? 1, 2, 3, 4. You have a deep wave 4 retracement. That is okay in your leading diagonal. Wave 4 can come all the way down to wave 2 and even wick within the region of wave 2. That's what you got. This is a perfect buying spot for a wave 3, or for a final wave 5. And your final wave 5 should be, let's see, if you take your Fibonacci extension of waves 1 through 3, retracement of wave 4, you want to target a minimum of the 1618, your phi ratio. That should take you to 10 cents. Okay? 10 cents minimum. Okay? But again, you can have extensions. So that's just a 1618. You can come all the way to the 2236, 2618, and beyond. So I'm seeing EOS come to a minimum of 10 cents once it starts going again. And this, to me, Rich, is a wave 4 of a deep wave 4 retracement of a leading diagonal on the smaller time frames. So that's EOS. All right. Oh man, we did a lot today. We talked about a lot. Hope this was helpful. Hope this was useful. In the meantime, we've seen some more positive price action. What is Bitcoin doing? Oh, Bitcoin looks like it's starting to move. Okay, it's starting to move. And this is what we expected. Again, my next main target is 32. I think we hit 32, 33, and then we spend maybe a month consolidating. Okay, that's what I'm thinking. Because once we get to that 30K level, it's going to take some doing. That is basically the bear market. What do you call it? The bear market zone. What do I want to say? The door or the gate, the guardian of the bear market. You break 30K and you break that massive, very important resistance, because it was very important support on the way down. That's what I'm trying to say. Okay, but I think that this next move takes you up there, and I don't think that it takes too long. I presume, based on the time-based fib extension, that we hit it between the 25th and the 28th of this month. So just in a few days. We're right now the 21st. So I think the next week, within the next week, or sometime within the next week. Okay, so that's pretty much it for me. Hopefully we get this breakout. This is a nice bullish hammer candle right here that you see on the hourly time frame, right? Continuation should give you a breakout of this structure on Bitcoin. And in all the other assets as well. Yeah, Litecoin's looking really good. Ethereum's looking really good. Shiba Inu is looking really good. Everything is looking bullish. I hope you guys have not been shaken out. I hope you guys are still in your positions and you're doing well. And yeah, I hope you enjoyed these positive moves to the upside. We definitely deserve it. And it's a high time that we get to experience moves to the upside. All right, that's it for me. Take care. Have a great rest of your Sunday, and I'll talk to you tomorrow. Bye.